guys, it's April Jenkins. I'm with Compass, and I'm here with one of my favorite people in the world, Miss Gina Bradley. And we are here, we're going to be talking about loans. What is the loan process? So for all my first-time home buyers out there, you guys, this video is for you. We're going to be talking about first-time home buyers and what the loan process is and what type of questions you should be asking your lender. Gina is with Capital City Home Loans. Gina, go ahead and introduce yourself.
Well, I am Gina Bradley with Capital City Home Loans. I was a realtor and now I've turned to the dark side, the numbers. So now I work with Capital City Home Loans and been doing that and loving it because this is the part that I used to love to get people into houses through finance. So I finally went into the niche. So I've known April for a while and now we're joining together, little partners in crime here.
Yes,
helping
yes.
people gain wealth through real estate. And I'm excited to talk about it today.
Yes, well, thank you, Gina. We really do appreciate you taking out the time today to sit and interview with me. So we're going to get right into it. All right. So what is your process for pre-approval and closing?
Well, pre-approval. So the first thing we want to do is get the pre-approval, not just a pre-qual, but a pre-approval prior to the buyers going out and trying to find something because they may have $500,000 taste and really they need to stay around 300. So getting the pre-approval is fun because what we do is I can do it either on the phone if people want to do it in person. But there is an application they need to fill out. That application, it has asked them about all sorts of different things, how much they make now, where they live, where they work, are they renting, are they owning right now, do they have to sell, all sorts of different questions that I need to gather information about their credit worthiness. And so we do check their credit at that point once they have their application filled out. And gather documents, which is usually 2 months of bank statements, their recent pay stubs, a month's worth, and W-2s for the last 2 years. So that's kind of all we ask for up at the front and see where we are. Once we have all that together, we have a clear picture of, are we FHA? Are we conventional? We structure their loan to what they would need. So that process is documents, fill out the application, we pull the credit and talk to them. To close, after that, we kind of zip into, we order the appraisal and title. Once they get a contract, they run around with April. April runs around, finds the perfect house they want, and you get a pre-approval letter from me and also a phone call to the listing agent on your behalf to say, hey, yes, I've got all their documents. I've checked their W-2s. I mean, that's what the homework's all about. So we can win on these.
Great.
That sound good so far?
Oh, yes. So that we're going to just recap what you just said. So pretty much you need to get a pre-approval instead of a pre-qual because it's more documentation on hand that you actually need to get them a pre-approval, which actually is better for you when you're doing a bidding war. So if you're in a bidding war, you definitely want to let the seller's agent and the seller know that you are serious about buying a home, okay?
Definitely.
And definitely, yes. So, and then before you go out and show houses, you definitely want to make sure that you are sending all your documents, not necessarily a verbal communication with your lender. You want to have written proof that you're actually making the money that you're making and it's actually documented into your bank accounts and what have you.
That's right.
Okay, and then as far as the closing is concerned, you definitely need to get ready, prepare for paying for the appraisal, and then also making sure that you're turning in any additional documents along the way. So if it's after 30 days, you need to send in another 30 days of bank statements. You need to,
update,
run through that process. So it's a lot of repetitive information that you need to give, mainly for updating your account to make sure that you're not opening any new credit cards and what have you.
That's right.
Great. Thank you, Gina. All right. So our second question is, how do you communicate with the home buyers?
Well, communication is really the buyer's choice. So I asked them, how do you want to communicate? Do you want to do it via email? Do you like a text versus a phone call? Is there times that you only want to be communicating? I'm available all the time, so I try to work with them as much as I can. And I put down, some things I don't like to text. There's too much. So maybe I'll do a video text, or I'll do a video over the email. And I like to be able to communicate that. And if you have questions, I'm always available by phone. So anything that the buyer wants, I'll try to communicate that.
Okay, awesome. So we definitely love how you have you're giving the buyer options on how they prefer to be communicated with. So that is really key to searching for a lender that fits your needs.
Mm-hmm.
All right,
so I like all that video.
Yes, yes. So then our third question would be, what will be a down payment requirement?
So you found a house, and now you put earnest money down, all right? So that earnest money will get credited back to you at closing. So that's part of your down payment. So it's just like a little piggy bank, I call it, towards your down payment. So that portion is part of your down payment. So I just want to make sure that you understand down payment is usually, let's say FHA loans are 3.5%. We have 5%. We have 20% loans, depending on the type of loan. We also have zero loan down payment loans. So it really depends. You don't need 20%, as the older people used to think. 20%, you need more money. No, we can actually do things with zero down to 3% to 3.5% down. And that's of the sales price. So if you're thinking of a house, do it times 3.5 or more or less, depending on what program we fit you in.
Okay, awesome. So, so depending on the program that the buyer qualifies for, then they would be able to determine if they qualify for the zero down payment or zero down, 3.5% down, 10%, 5%, just to really depending on what loan package that you qualify for will determine how much your down payment will be. All right, so speaking of down payment, do you participate in any down payment assistance programs?
Yes, quite a few actually. We at Capital City Home Loans have a community loan, and it's based on areas in the whole state. And so we kind of pick out little areas where they need help. It's called community because we're trying to build wealth in the community. So it has income caps and census caps. So we kind of fit you into where you would need it. And so if somebody's making less money, you can fit into that. There's also Georgia Dream out there that gives quite a bit of money. They changed their fees. I have to check what those are now. We also have USDA loans, and you'd be surprised where USDA loans are. They're all around in the rural areas, which the government's trying to build and create homes out there. So that's a zero down program. Of course, VA loans are zero down. They're very lenient. It's a very good program to get into. We also work with Chenoa. Have you remember Chenoa?
Yes, yes.
No income caps on that. Interest rate's a little bit higher, but it takes care of the whole down payment, and which is great. You want that. And some are repayable grants where it's still in your home, and some are just grants.
Okay, great.
Give you money.
Awesome. So in other words, the down payment, you do participate in down payment programs for first-time home buyers or people who need the assistance, and they have depending on the income requirements, or with Chenoa, there's no income requirements. So it really just depends on you, the home buyer, and what your needs are for down payment assistance.
There's usually something for everyone, unless they make a lot of money and they don't need that. So if you're in need of it, we'll find you something. Sometimes they take the whole house income. So that's a little
okay.
bit too. So.
Okay, good, good. All right, so our next question is, what fees will be included in my loan and what fees will be due at closing?
So the fees in the loan, so you're saying, is this what you're asking about, what's in your loan payment or?
Yes, yes. So like the PMI.
Okay. So in your mortgage payment, in your loan, what you're going to be paying is what I call PITI, which will be your principal, your taxes, your insurance, and let's see, principal, taxes, principal, interest, taxes, and insurance. There you go, PITI. Pity. That's what we call it, pity. And your principal is based on what your loan amount is going to be. So you put that down payment that we just talked about down, and whatever's left is called the principal. And then your interest is based on your credit worthiness, your affordability, and they put that together, and the big guys in the sky tell us exactly what your interest rate will be, and then we plug that in. That's your interest. And then your taxes is your property taxes. So each county has their own property taxes. That's around 1% to 1.25%. And then your insurance is your homeowner's insurance, because insurance has to be on your car. Well, your house has to have insurance as well, in case if there's fire or you have water damage or something like that. And that takes care of that. So that's your pity. And then in your closing costs, you're going to have your closing costs are your lender fees, which ours is less than, I think it's $11.98 total for our lender fees. And then you have your closing costs, which is your attorney fees to close your loan. And then you also have your intangible tax. You have pay off, we have to go record your loan and all that. So that all adds up. All these things just to close your loan. So sometimes it's around 3%, I would say.
Yeah,
your closing costs fees. So you have your down payment plus the closing costs fees. So those are
yes. Yeah, so there are a lot of fees associated with your loan, and my tip would definitely be asking for a fee sheet so you can have a good example of what you're expected to pay for the down payment, your lender fees, and closing costs. So it gives you a little bit more of an understanding of what is expected from you, the buyer, the home buyer, and what you actually need to bring to the table. Now, of course, that will vary depending on what type of loan you have. So with FHA, there's PMI, which is the mortgage insurance that you have to pay on top of the loan. So, you do have different things that are associated with it. And I would say, make sure that you are asking for a fee sheet when you're talking to your lender.
Yes, and there's two different kinds. If you're paying less than 20%, you're going to have mortgage insurance, PMI or MI.
Yes. All right. And then, so our next question would be, what credit scores do I need to qualify for a mortgage?
So 620 is our level that we kind of cap you out to get any type of a loan. And then it goes up from there. So the better the rate, the higher the score. The lower the score, the lower the score, the higher the interest rate. The higher the score, the lower the interest rate. There you go.
Yes. Okay, awesome. So 620 is the minimum credit score required for Gina at Capital City Home Loans.
We could do it for less credit, but you have to have a lot of money to come to the table.
You have to put about like 10% down or 20?
Sometimes, yeah, sometimes more. It's just
okay.
620 will get you where you have a normal rate, normal down payment.
Gotcha. All right. And so our next question would be, do you offer mortgage points?
So mortgage points, yes. If someone wanted to buy down the rate, is that what you're talking about?
Yeah. So first, let's say, what is mortgage points? So we can help the audience understand that first. Okay. And then we can say if you actually do have that.
Yes. So mortgage points are a percentage of how we take down the interest rate or increase the interest rate to give you a credit towards closing. So we can either buy down the rate by quarter points, it's like an eighth of a point each. And every day it's different. It's not a set amount. So when you say a point, it could be different monies. It could be $600. It could be $2,000. So we have a sheet that we have to go to each day to see what that really is. So if we want to buy down a rate, sometimes they won't even let us buy down the rate. Isn't that crazy? But there is points. We could buy down the rate, or if you need a lender credit, let's say you're doing something and we need to increase the interest rate to cover some costs that you need. And that's what we do, is we increase the rate of just an eighth or a quarter sometimes to get you an amount. It could be, you need $2,000 to $3,000 and we've got to make it work. Sometimes it's just worth it to do it. And it's not really going to push too hard on your monthly payment.
Okay. So the mortgage points, it helps buy down the interest rate of the loan. Okay. And all right. And then so our next question will be leading into that would be what is the interest rate and the annual percentage rate? So I know that varies. So you could just give us a little sliding scale on what it is in today's market right now.
Today's market in the purchase area, not refinance or anything, but in the purchase, it's going nuts right now.
For March 2022. Yeah, so we're going to say this is March 2022.
It's probably around 4.25% to almost 5, depending on your score and how much you're putting down. So if you put down more money, you're less risk. So the lower the score. You put down 3% like on a conventional loan, your interest rate goes up. So it could range from 4 to 5, depending on your down payment and how much risk it is for the lender.
Okay. So
what they're trying to do is package these loans, but the interest rate is right around there and it's increasing. I'm hoping that it'll steadily come down maybe by the end of the year. I don't know. A lot is going on in the world right now.
Yes. So with the interest rates, they are changing daily, just really depending on the
time of the day too.
Yeah. So
constantly changing all day. Yeah.
So with that being said, what is a mortgage rate lock?
So a lock would be, let's say April, you found them their house and they're ready to lock it down. Now we can do a lock for 15 to 60 days on a normal basis. We can also extend it, but that costs money to do. And it's very rare. A lot of people don't want to do it because the interest rate is much higher because they push it out thinking the interest rate will go up. You're paying the same amount anyway. But we can lock you in, like once you say, okay, I've got this house, I'm okay with that rate, I like that payment, lock it. So then we push the button and we ask our rate desk, what's the interest rate right now? We see it, we lock it in, boom. That'll hold that fixed rate for your 30 years that you're going to be in that home if you did a 30-year loan. So that locks in your interest rate at what that day was.
So if the interest rate is 4.5 today, March 21st, 2022, then if you lock it in today, that would be your interest rate. But that lock is only good for 15 to 45 days. Is that what you said?
Do up to 60. Mm-hmm.
Okay, 15 to 60 days. So 15 to 60 days. So like if you're under contract and say if you're under contract and something falls out and you end up having to move the closing, you want to make sure that you are still in that time frame of the lock the mortgage rate lock that you have, because after the 60 days, you'll have to end up paying a lock rate fee. Okay, so you need to make sure you're keeping track. Agent is keeping track and your lender is keeping track of the days that you are closing. So if you had a new construction home and it was a little bit more delays with getting it closed and finished on time, you want to make sure that you are closing in that lock rate time. Otherwise, you have to be prepared to pay the extra fees that are associated with that.
Yes, that's right. Those fees they're daily, they're bigger daily. So we always like to close before that interest rate lock is non-valid.
Yes, so it's good to have an interest rate lock, but you need to make sure that you're on schedule to close and you're prepared to know what happens after that lock rate. It needs to be extended.
That's right.
Well,
Now,
thank you.
the APR is something that we don't use in lending, but what it is it's the total amount of the whole process, even the prepaid items that you paid up front that is not part of the loan. It's part the sales price and everything in it, plus all your other things, and then they put the interest rate to that. So that's why it's always a little higher, because it's using fees that you pay out of closing, like pay up front. So that's why it's always a little higher. I wanted to make sure we answered that one.
So total of the loan, all the expenses associated with the loan, and then I guess the years of the loan, then that would be the APR rate. Okay.
Yep, all the fees together for closing it and before it and all that.
Gotcha. All right. Well, Gina, I really do appreciate you taking time out of your day to come and interview with me and answer some first-time home buyer questions that many buyers call and ask me for advice. And I wanted to have a lender come on here and talk about what is needed for the home buying process. So if you have lending questions, you can definitely contact Gina. I will have her information down below in the comment area. You guys, thank you for watching. I really do appreciate it. Gina, thank you for coming on with me today, and have a wonderful day.
Thank you.
Oh, and also make sure you follow my channel, April the Realtor. I really do appreciate it.
Thank you for having me. You guys have a great day.